This is brought to you by Verified Crypto Traders. I hope you enjoy the webinar. If you're interested in signals or education, check them out. They also have the new copy trading bot, which actually takes signals from the traders and allows you to manually enter those trades with a click of a button. So check that out. Other than that, I hope you enjoy this educational video that teaches you about technical analysis and the techniques that I use.
So, hi everybody, welcome again. My apologies for disconnecting the meeting, but I had to start the recording again, and yeah, didn't know it was ending the session. So today we'll have a webinar from Erik, one of our traders on the Verified Crypto Traders company, and he will show his technique. And I will let him do his thing. So, Erik, the floor is yours.
All right, thank you, Evo. I seen that Thomas wanted to turn the screen over. Is that right? What did you want to show, Thomas? I just have to know out of curiosity. I hope it wasn't porn. Anyway, I'm Erik. I'm one of the traders here. I am more, when I think of myself as an educator, I'm not really your typical signal provider, which might bother some of you. But the reason I do this is because of the fact that I want people to learn to understand what they're seeing when they look at the market and the market structures and everything that they see. And it's really a case of three things: observation, planning, and execution. You probably have heard me repeat this over and over, and I'll always repeat the same things over and over again, because by doing this, you can, as a trader or investor, can make smart decisions. And that's the whole key to trading. If you want to do well over time, doesn't matter if you're doing high risk and crazy sums very quickly, scalping, or if you're long term, if you're looking at charts like this on a daily or a weekly, and you're trying to discern the activity of the marketplace, there are structures that present themselves. And it doesn't matter what I say or what I think. This is what I've observed. And because of the observations, I make plans on them. And what I'm going to show you today is going to be some of the patterns and structures, simple things that you yourself can use and to think logically. But the first thing you got to do is observe what happens, okay? And the second thing you got to do on those observations as you learn them over time is make plans, like me scaling in and out, planned ahead of time. And then the last thing you want to do is simply execute on those plans. Now, what are some of the things that bother me and some of the things that will get in the way of you becoming a logical and good trader? And those are yourself. Your worst enemy is your ability to think about non-objective things that aren't going to help you make money, right? Because your objective is to grow your balance. And then you become a subjective thinker. Examples of subjective thinking. And this is important because if you do this, you're going to derail any learning that I can possibly give to you through observing. And most of it's going to be all you. Nothing to do with me. I'll show you the way. And then from there, you're going to go over and pick up what I'm saying, because you're going to see it execute or happening simply because that's what's there. When you have thoughts and you get information, like you have a feeling, you want Ethereum to go up in price, and let's bring up Ethereum, because you're invested in it, and you're going to find whatever reason you can to say that this is a good investment. You automatically become a subjective thinker. Your thinking becomes biased. We don't want that. We want to note what's there and say, okay, I'm going to make a plan based off of this, and I'm going to look for this to happen. And I'm going to give you a positive point of view on Ethereum because of what I can see in the chart, even though I personally don't want to touch Ethereum because of a fundamental flaw in it. And you know what that is if you read any of my stuff. So let's go to Ethereum, and let's go from a weekly that we have here to a daily. And forgive me, I have to redo my charts here. Expand, contract, on and on. All right, so what's the first thing that you notice here? So you get my point of view. I want to hear yeses here, that we do not want to become a subjective thinker. We want to pay attention to what happens most often, what's on the chart that we can see. Okay, that's number one. Even by me having a fundamental point of view, it's contradictory to what's on the chart. And the chart has, it takes precedence. It is number one. So that does not mean you cannot have opinions or beliefs or a philosophy and execute off that philosophy, because I do it all the time. If I believe that Ethereum is a no-go, I do not touch it, then I will avoid it, even if technically it's perfect. That's because it fits no longer in my philosophy for whatever fundamental reasons, and that's fine. But still, the chart right here that we see still exists. It doesn't matter what I think or feel, and it will exact itself according to what's on here more than likely. All right, it doesn't matter. And you don't want to become subjective thinkers who use indicators and belief systems to go over and make our trades, because then there's no basis on reality. There's nothing that we observed. We're not going off of anything that we can see, right? Make sense? Okay. So anyway, we see the primary pattern that I like to use on this chart of Ethereum, which is a pair that I'm not even really trading right now, right? Because fundamentally, I don't want to touch it. But what we see in the chart is good. And there's a bunch of things here that denote the likelihood of it going back to this level up here. And let me go over and draw a line, a median from here. And we're going to try to capture the most amount of bars in here intersecting. I can tell you that's pretty close right there. Yeah, that's pretty much the mean right there. So this is a key area up here. All right, so do we see the pattern that in the purple triangles that I drew here? So go ahead and answer on the chat, because I can see that. Okay. Now these patterns that you see here look like big M's or big W's when I draw them. And the majority of the time, there has been an event before the pattern develops. All right, for example, we had a big down move in Ethereum that goes all the way back from when it was all the way in the 12 to 1300 range. Now you see the little triangles that are right here that have developed, right? Well, let's go back. Let's go back in history and take a look at some of the bigger ones that have developed. This is the future. Let's go back in the past and see what we did then. Now, we can see the big move going all the way back to June, of which was a seller here in the 300 to 400 range, right at this blue line. That was once a red line. And the reason why, because I had a pattern. And let me show you that pattern. And you're going to be funny enough, you're going to say, oh, I can kind of see it. This is more difficult to spot because of the fact that you'd have to match it up with price action and the timing at the time. So, and there was a bunch of divergences and things that don't really, are not going to make sense. But anyway, boom, 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 to there. All right, so if I draw this on a triangulated point of view, this still ends up being a W. All right, so you see it. Now this is more convoluted. This is a strong parabolic up move that we see in the charts, but this is still a W. And there are a bunch of other signs there was a divergence at the time. If I went to a lower time frame, you can see it from here to there. Make it yellow. That was a divergence in price, this whole area. And then there was another one that stretches from here. I was getting all kinds of warning signs. And then finally, I had a doji appear after and this created like a tweezer top, right? Now this is price action that I'm showing you right here. Nothing to do with the pattern. I already have the pattern structure right here. I can see it often the way it creates the smaller emblem, the sideways small price action with limited range when it had previously larger ranges here. So we take this 1, 2, 3, 4, and 5. We have 5 points. There are, for most patterns, doesn't matter if it's head, shoulders, or whatever, there's generally 5 points that you want to pay attention to. 2, 3, and 5. Those are your key numbers. Now 4 comes along for the retracement value. So 4 would be 1, 2, 3, 4, right here. So I had this targeted as my target back then when this was a sell area based off of the pattern. And I used to exit a good portion, not all of it, and I was buying it back when it went right down to 0.4 on this initial move. And then we can see the move here. It goes over and retests this up here, pulls back. Now I'm going to show you some interesting things. I'm going to show you the second part that I use. Now you see the pattern that I use right here. You see how I spot divergences. You can see just the basic structures. All right, what am I looking for? I'm looking for support and, well, there's the X point too, but we don't really count the X point. X points are origination points. Do you get that? X is true starting. Does that make sense to you? That's why some people would count 6 and so forth. But we're really looking for the primary structure of the pattern. So if I can't connect those triangles to points, they don't exist, even though the true structure of it would be all the way down here where it originated from. So this becomes part of the movement. And what I usually do is I look for prior highs and lows. Like this would be a prior low from the origination point. So I'm computing different things in my head. It's a combination of values. And it is complicated. And you're not going to gain everything that I know from 1 or even 10 webinars. You have to remember, I have probably over 30 years of experience doing this. That's a sick amount of time to be involved in charts. And, the one thing I've learned is that the market is always right. And it doesn't matter what I think, feel, or whatever. And the only thing I could do is observe what it's telling me. And it pretty much goes exactly the same lines with women. It doesn't matter, you could either be right or you could be happy. And X would be your origination point. So X would be down here. Some people, like Elliott wave theorists, do this. They look for a starting point for where a pattern begins. So X would be here, and I'll put it up there for you. Or even a low. You can either mark it as a low, but generally wherever the move starts. So if we look at this right here, this is your primary move. All right. So does that make sense to you? So 1, 2, 3, 4, 5, 6. That's at least the way they do it. Well, there's 2 different ways you can do that. Good question. You could do it from the primary point where the move starts, which would be right here, right? Or a prior lower low or a low, which would be right there. I use both. Want to know why? Because markets are dynamic. And this is where I tell people, a lot of people try to fit the market into a fixed point of view. Elliott wave theorists. Okay, everything's going to move this way. Here's the count, blah, 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 blah. And I went over the counts with them and I said, okay, that's nice. But statistically, it's not really relevant because of the fact that you're not taking into account all the other variables and you're getting a very low hit rate. Maybe you get 60%. Okay. Or 50 something percent as a win rate on what you're showing. And they're always redrawing and saying, oh no, I made a mistake, it's this. And you'll see that happen a lot. And that's because they're using a set of dynamic principles that are not very dynamic, they're very fixed. And you'll see this in all kinds of, this is one of the reasons I have a hard time recommending books to people, because they're trying to learn about the market through what? A book. You learn about the market through the market. And people like to draw pictures and they like to say, okay, this happened because of this and this. But the problem is when you really look at it empirical data, they're drawing structures that are good for marketing or good for what they're trying to present and sell you. But in reality, in real life, it doesn't really work that way. There's a combination of events and things that occur on a chart that can cancel out one to another. And you have to understand in totality what's going to happen that's going to affect those things. So if a pattern like these little W's and so forth gets in the way of an Elliott wave move, and they're not paying attention to it, and it takes precedence, it says, okay, well, I'm exacting myself according to this, then they get all screwed up because of their one simple point of view. Their Elliott waves are not working, but they're only using one things. Books are good to learn what people think about trading. And there's too much marketing in most books. People trying to tell you that they're right, and the market doesn't care about right or wrong. It will do what it does, and you'll see what happens in the structures by the amount of times that they react to what they do. All right, so let's go over and take a look at the past where I traded Ethereum. I bought the Ethereum back when it was $11 to $14 a coin. I owned Blackcoin and Bitcoin and a few others. And it was not really a big investment to me. I wasn't really super interested in the crypto markets because they were kind of insane and they were full of strange people that were mostly into drugs and didn't really understand them. But then again, I had seen a few $1,000s go up to $80,000 in less than a year. And then I became interested and I was like, holy crap, look at this volatility. Just from a trader's point of view, all I care about is the volatility. If people are really interested, and then the past year in 2017 with that move, I learned everything about crypto that you could possibly learn. I read everything, and I learned the different functions of POW versus POS, and and we even created a website, and that was again for our education and for everything that we did with this, which is smart options. And then I had a friend who owns one of the ICOs or company that is trading centric. And they ran an ICO, and I actually Smart Options name comes from them because they didn't know that what they were creating were called smart options. They created a binary option and they used it with a smart contract. So it's really a smart option. They call them smart contracts. Well, I said it was smart options and they liked it so much they use that now. But they also want to buy the website. And I'm like, no, I don't think so. But the key here is that, you see the structures that I'm going to show you on this chart. Let's get back to that because I'm going to get into outer space here. The first thing that we did, we see the structure. So let's take our fib tool, the second part of what I use. You see the structures that I draw. We're going to get rid of this. We're not going to use X. That's not part of the structure, by the way. The structure is really here to here. And I keep it contained in the triangles. All right. And you can call these different things. You can call them crabs. You can call them whatever you like, whatever patterns you like, but you have to be able to visualize them because they often will retrace to their points. And the points are the 1, 2, 3, 4, and 5. 5 is your explosive move, the momentum and the empty volume and so forth. It has no real, it's overbought. And then it will retrace to point 4. It's back to its consolidation point and retrace on a percentage basis most often. Because remember, nothing is exact. Everything is nonlinear in trading. Right there. Where's it? Okay. All right. So let's go over and look at how I traded this. When I was buying back, I was looking for 0.4. All right. Let's see this here. Let's draw an arrow. Oops, wrong side. All right. So let's make it a green arrow. And let's make that green. All right, so you see this green arrow right here pointing to this line? This is 0.4 of the pattern that I'm showing you. And this pattern I call a sea monster. You can call it a crab, butterflies, gartleys. They all have the same similar structure, and that's what I pay attention to. I care about the structure, and the structure are the 5 points. 1, 2, 3, 4, 5. Your first between 1, 2, and 3 are your high low. And then from there, I'm going to show you how I calculate what I'm looking for to the upside and to the downside. All right, so let's go over and move this. We'll move this for right now. Do we see the structure? Do you guys see and understand the structure that I'm drawing? We see it on the chart? We can kind of see the way it's shaped and everything. We can see the origination point down here, X, or here. Does all of that make sense to you? Are we tracking? Yes, no, maybe. Come on, give me feedback. You can do it in the chat room. Okay, good. So the explanation is clear to you. So we know that I can see this point here. But what I really want to focus on, right, is first the structure. 1, 2, 3, 4. At the time, let's just take 1, 2, 3. So we have our structure. It consolidates. It starts to move. And we're right here in time. This is before the pattern actually develops and becomes into effect, which if you're seeing this type of price activity, you can start to guess and to range where it's going to go. But you don't want to do that too much because we don't want to become what? We don't want to become fortune tellers. It's one of the things I want you to stay away from. And right here, I'm going to put this right here. So if I have my 1, 2, 3, and then my 4, and then prices start to move up, and I'm going to start estimating where I'm going to be targeting. Boom, I'm going to be looking for different areas depending on price action. This one was strong, so I'm looking for at or above the 200% of the range. All right, now how did I calculate that? Well, very simple. I took the high off the first, my origination point down here or here, doesn't matter. 1, 2, 3, 4, 5, right? But I'm already only right here in the pattern. So if I'm expecting the breakout upwards and I'm looking for it to go, at the very least, I targeted this level up here. And we can see all throughout here, I was saying, oh man, this is going to pull back, get ready for the pullback. And I was telling my partner this, and the perfect geometry, perfect structure. This is what's going to likely happen. And so the first move up here, I was a seller into this 362, and then when I sold more when it went in here. And this is the scaling out part that I do, and when it created that doji, I was out. I was basically all gone. I think I kept like 20% just to say that I was still in it in the big move, and I had some Ethereum. But this is back in the day, like when I started when it was 11 to 14, and this is from the same people that Spectra, the same people that I was hanging out with, and they're fintech guys from Goldman Sachs, and and they're they have a very nice pedigree. Let's put it that way. And we were discussing the crypto market back in 2016 about how it's going to explode, and sure enough, it did. I wasn't paying attention to it, to be honest with you, when it went into the summer. But as soon as it hit that summer, I started paying attention because the sheer volume and the type of people that started talking to me about it, it was just overwhelming. And this pattern that we see here, the structures that I pay attention to, happen in the markets that I've traded for the longest time. Now, there's a big difference in this. These retracements and these ranges and these patterns that I see are going to be far more accurate than in the euro or in the stock market. And now, why is that? Go over and give me an answer as to why is it more accurate here than it would be in the stock market. Why do you think that would be? So go ahead and type in some answers. You're all, remember, this is interactive. I like to communicate with people when I'm doing charts. So somebody tell me, why do you think it's more accurate? Exactly. You made a good point. All right. So what that means, more based on emotions, less professionals. Professionals have algorithms. And this is another part. I'll show you this later. Those algorithms they use are by mathematicians from MIT, NASA, whoever. And this type of math that they use makes the market very efficient. Okay, it makes it super efficient. So patterns that you would get off of here that are the basic nature of our emotions and the fibs in nature and the way things go up and down with high volatility in a very emotional set of people in a new market, you get these type of movements and patterns that are very accurate. And I did exceptionally well. Percentage wise, I completely killed it. I was able to catch most of all the moves, selling from up here. Let's make this a red line so it makes sense to you. Up to there, selling to there. I was a seller. And then I was a buyer from this green line all the way back down to the 88% level. And I'll show you that. I'm going to show you a combination. And I'm going to show you why fibs matter in trading. All right, so we're going to intersect this right here. And we're going to see the power of fibs. And this is important. The 61.8, the 38.2, which are inverse examples up and down of the same themselves, which is 2/3 basically. Okay, makes sense? We can all count, right? So it's basically 2/3 of the range up or down, right? So 38%, 1/3 here, 2/3 there, and back and forth. All right, it's the same thing in reality. Now, if we go back to the structure that we originally started out from point 1, 2, and 3, which are the lows and the highs of the structure, the main point of the structure, and 4 right here. All right, so we get our move up, 1, and you want me to put, let's go over and put the counts in there so it shows up on the video. I want this to stick out. Two, 3, And I'm going to show you other examples of this on Bitcoin because the same thing occurred there. Now, because emotional people trade this, they make it very easy for me to go over and look for profit points and points of interest of where I'm going to target on my trades. I make it super easy because these people don't know what they're doing. They're just trading based off of their herd mentality, very emotional. Any news item comes out, they freak out and they sell. Anything, you know, all of it just, they're just a mess. They're a hot mess. But they're actively trading this. So they're like food to any professional trader or anybody who trades the markets because of the fact that they're just raw energy. That's all this represents, is raw, uninterrupted energy. Once the institutions move into this space, it's a different ballgame. Things are not going to happen the way you think they are. They're not going to no longer follow this. They're going to follow my algorithms that I use that are time-based, and my life becomes easier in a different respect, but it becomes more difficult for the average trader. They'll usually get crushed, and unless they're really sharp, they're not going to do as well. These patterns and so forth are not going to have the same tendencies and effects and be as accurate as they have been, more than likely. And that's because the institutions use algorithms. Guys from Goldman Sachs and JP Morgan use these algorithms to profit, and it's very small marginal numbers, but they get in the way of the natural flow of the market, the herd traders, and they crush them, basically, is what it comes right down to. But anyway, you see the count that I have here, right? 1, 2, 3, 4, 5. 5 points, right? Makes sense? Yeah, I thought it would. Yeah, it makes perfect sense. I have to remember, I see these things without even drawing lines or anything, but for the average person, they don't. So I have to be cognizant to make sure I put visual cues and remind me if you want to see something or you're not seeing something to explain it to yourself. The visualization will help. Now, we see the range that occurs, right? And we go off of this point. That's your structure point right there. And that's why I intersected 2 different fib ratios. Do you see the way that I drew those fib ratios? From this point down here in point 2 to the top of point 3. Now, why did I do that? That encompasses the main center median of structure. Okay. Okay, great. This shows the median of structure right here. Okay, this is our first count. 1, 2, 3, 4, 5. That structure between 1, 2, 3, and 4, the high and the low, 3 and 2, is where I first set my first set of fibs for my projection of 5. Now, I don't know if it's going to go above 172.8, which it does a good percentage of time and stop, or if it has a lot of momentum, which it had in this case, and goes above the 200%. And in this case, it went even beyond the 200%. And that's normal. When you've got a strong market and so forth, they're not going to go always to the exact number and then pull back. When the market becomes more evenly balanced, then they'll have a tendency to do that more. But in general, if the market's really excited and goes over, that's a sign that there's a lot more strength built into this. So it went above this 172.8. It went above the 200%. And these levels that it went up to, about 27 to 61, which is basically, what is that, about 34, right? 35 points. So 35 above there would be 97. So let's see. Yeah, 96. So you see how it evenly calculated right there? I want you to pay attention to this too. This is important. Markets, even though you might not always see it, have a tendency to have equal ratios. Okay. When fibs are calculating off and they're going square 2, square 3, square 4, and then you go by powers of exponential levels over time using the geometry of the marketplace and fibs and so forth. you'll see a lot of equanimity, which is basically to say the equal values of movement. So we calculate from here to there and then bracket right back up to here. And we have a good relationship of where prices might stop on the third ring. So this overexcitement shows us what? There's strength in the marketplace. It went above the 200%. That's a great thing for it to do. It shows there's more buying activity. Now, even though it pulls back, it still has its strength, and you will see into the future how that corresponds later. All right, so we have our structure. We go from 1, 2, 3. This is our point. We get our projection upward to 200. It goes past it. Now, even though it went past it, do we care that it went past it? Is this the end of the world? What are we going to do? It went past it. No. What we care about is what high was set. So the high was set on 0.5 right here, and it never crosses above there. That's our high. 2 is our low from the structure of the pattern. All right, so our high-low from here. On the downside, now comes into my areas of buying. So what's the first area that I look for when I'm buying on the retracement? So somebody tell me, where's my first buy point based off of that chart that you see right here in front of you? Exactly, very good. So you're hitting all the marks. Dansky gets the A+. Look, you too. So you both see exactly where I'm first targeting. You can see the green line, 0.4. That fits within the structure, right? That is the average retracement you will often get on this pattern, so that you know. We look for 0.4. This is where it broke out from. This is the low. And then the extreme parabolic move upwards. And then the projection, 172.8 to 2, which 172.8 is Gaussian, I should say, in nature. 2 is your equal. So we got different types of symmetry. We have, I'm sorry, 2 is your Gauss and equal, and 172.8 is your more, what would be a good explanation to you, so I don't go off into math terms that you're not going to understand. 3 and 4, all right? 3 is what? What is that a number of? It's infinity, right? You can't, you go from pi and on, and you just keep on going, right? There's no squareness to it. There's no entrapment. Doesn't end, just keeps on going. That is your Mandelbrot type of chaos theory and the world that all works in fractals and da-da-da. And then we have the perfect universe, so it goes to 4, which everything is equal to, and 1, 2, 4, 8, on from there, right, when you calculate things. So that's your perfect universe. This is your imperfect. Well, things in life don't go perfect or imperfect. They're nonlinear. They will sometimes be perfect, sometimes they'll be imperfect. So you're trying to get a relationship, and you're trying to weigh what's likely to happen from there. All right, so that's the theory on the reasons why I use 2 and 172.8, which is a double square of 61.8. And it's a 2 square. So there's a relationship between doubling geometrically, doubling the square value of the main root, which is 61.8, the golden triangle. And that's the reason why, and that's what happens most often in this pattern. And it's just a simple mathematical, natural phenomenon. And it works perfect in an emotional herd of traders. Just does. Back in the 90s, when Forex was new, killed it, destroyed it, just using these patterns and the up and down extremes of the moves that were in the currency market when traders were able to invest in it. Even the stocks in the 90s and 80s, early 90s, I'd say, same thing. But that all went away as computers developed and mathematicians came into the marketplace and made things very efficient. But they made one big mistake. They all use the same math. And because they do that, they give me an advantage as far as time goes now. So I hope they come to this market because I would like to eat their lunch. But anyway, we understand the basic structures that I just showed you right here, right? Now, can we correspond on the downside from the top here, right? 1 from 5, back to 2, the low here, on fibs? Do you see how the 61.8 and the 88.6 becomes into play here as well as support and resistance areas that I might look at? I have no certainty in markets. There is none. But I have ratios and I have points for support and resistance that I can use as a trader to make money. And by buying low and selling high, I profit over time. And I've always done that. So do I understand that the high and the low, we have our fibs. This is your 0 point up here, your end point. This is your low point, and we calculate down here, right? And these are areas that I buy in, 88.6, 61.8, which is close enough to the 0.4. So I wait for 0.4, and sure enough, it bounces one time off of there. But I'm a buyer here scaling in at 61.8. So I don't maybe catch enough here, but I catch enough there. And then I reverse it and start selling when it goes back up. If I flip the here back up to this high, do you see that right there? Do you see how it gets close to this level right here, right up to this median line right here, and finds resistance? Do you see the repeating geometries and how elegantly they correspond in the chart when you start to put up all these ratios and you start to see what the market does? Not what you think or what you want, but the high, the lows, the different points it bounces, and how it goes to around 61.8. It's never going to be perfect, but the rawness of this made entries and exits almost infallible. I hate to use that, but it just made it very easy in trading. So this first pullback between here goes all the way down there, pulls all the way back up to here, resistance, finding right along that previous 38%, which is what? Is 61.8% inverted. Goes right there. Here, let's just drag it over. Almost perfectly, gets right up to that point and finds resistance before breaking back down, trading back to 0.4 again, going all the way down to 88.6, another buy point. So I was a buyer back down here to here. This was my at the time, my scaling in. And, I held. And then I waited, and then it went all the way back up to here. And I was selling generally from this point on, back to this red line. And buying again, back to this line here. I have various different buy and sells, and I'm going to show you fibs again. So let's go back to the fibs again. And if we go to this high, you're going to see the same thing. It goes back to the 61.8, goes back to from this low to here, goes back to the 61.8, right? Repeats itself again. As far as ratios go, there's no good structure anymore. Now it's building a gigantic structure. What you don't see here, it's building a gigantic structure. Now let me ask you a question. Do you see a pattern here? do you see a pattern happening? I'm going to teach you another interesting thing, and this has to do with interference, something that you probably haven't read in books, but previous price waves have interference, okay? Interference is where one pattern exacts itself, like this 1, 2, 3, 4, 5. And then you get another pattern like right here. And I'm not sure if you can see it naturally. I just noticed it at the time when I was trading it, when it developed this pattern. And my trading was based off of this at the time. I was trading Ethereum. Right? And this one winds up being more of the, which one is it? The Gartley? Whichever one. There's a combination of patterns. You're absolutely right. There's an inverted head and shoulders at the time I was looking at, and let me point that out for you. You're very good. You see the inverted head and shoulders. That's good. I like to see that because that existed there as well. And patterns are intersecting. They're not all encompassing, meaning they work with each other. Okay. So let's get that right there. Now, do you see those two yellow lines right there? And do you see from 0.5 here, we drop down, we hit there, we bounce back up to there, then we drop all the way down to here, go back up to there, drop down to here, and then break out from this yellow line right there, then go up all the way to there. Do you see the inverted head and shoulders that I just drew right there with the two yellow lines? Can you see the points? Shoulder, shoulder, head. Make sense? Now that's called combinatorial values. Two different patterns intersecting with each other, creating multiple geometries, giving greater weight to what? An upside move going out in the future when you get the break. Back then we had so much volatility because there was so much interest coming into the marketplace. So when we get these giant pullbacks, they ran all the way back up, created these structures, retraced strongly, and they don't always do, exactly what you want them to. Like, for example, we could have expected, that's 0.4 right there on this pattern, right? But it didn't do that. It only retraced over 61.8% of the high low instead. It did not go down to here or the 88.6. It doesn't always do exactly what you want. And I might have only bought once here, and I didn't get as much back in it, which is a risk going forward, right? But okay, now, no big deal. Let's go to the weekly, because this is important. Now, you remember the patterns that I show you, you saw them on a daily. You've seen the way that I traded it here. What do we see from the original move all the way down here? All the way down here. Well, I'm not going to tell you what we see. I'm going to show you. All right, so we're going to take our counts. We're going to change everything. The same, but on a larger fractal basis, right? I don't know why I have it in Kraken as 1600. Well, the average on this is really, really not that. All right, let's get rid of these fibs. They're in the way now. But do you see a basis of how things are repeating, and you can kind of see the geometries and things coming together with the ratios and the points that I'm drawing? So we get a clue. You're not going to get all of this in one shot, and you have to really observe the market doing this. So my point has a real, impact on your thinking. You have to see it happen. Forget about what I say. Watch what happens, because that's what matters. Not what somebody says, but what actually happens. All right, so let's see. You got 1, 2, 3. So we get our X point down here, origination, and then 1, 2, 3, 4, and the explosion upward here. And back in the day, Kraken is not a good exchange to have this pattern on. It doesn't look good. Let's try. Bitfinex, no, not so much. Coinbase, always like Coinbase. They have good geometry because their pricing is better. Except for I picked them and they do this stupid bar right here that gets in the way. All right, some things you have to ignore on these exchanges because their pricing, I don't know where they get certain prices, but this Ethereum had a drop in Coinbase back in the day, of which I was buying. I actually had some executions back to 11 to 14. Holy crap, that was crazy on Coinbase. When it dropped from the 400, when it went up to 400 and so forth. It did some kind of crazy move. I'm not sure if you guys remember, but and it dropped all the way down back to in like that. And it was just nothing more than a total crush. And that's because there was no real volume in the marketplace for support. And that would never happen if institutions were, which they are now, in it. But anyway, let's go back to the geometry. I'm going to make it clean for you. We're going to draw our points. 1. And then 2. And we can see it develop here. And this is my favorite thing to use because I know that when I see this, is that prices will enact themselves based off of it. And they will, at some point, come back into the marketplace and retrace. Crazy, look at that one. That one's huge. But let me ask you a question. Does it go back to 0.4? Just looking at that. From what you've learned now, what you can actually see, and what you have learned based off of the patterns, can you see it going back to 0.4? Do you know where that 0.4 is on the triangle? I didn't put the number out yet, but can you see where that 0.4 is? I'm going to draw the line for you, give you a clue. Isn't that funny? It goes all the way back down to 0.4. Would I consider that a major area for support? If your answer is yes, you're absolutely correct. Doesn't matter what I think fundamentally about Ethereum and so forth. Does the chart care? The chart could give a fuck less. Okay, the chart does not care. This is a structure that was in place. And it is on an extreme. Sometimes you will get it going within a 200% span between 1 and 2 or 3 if 3 is the higher number. But you have your expansion between 1 and 2. You have your secondary range contracted between 3 and 4. And then your explosive range, your exponential, to 0.5. And all we're trying to do is calculate where that would go and where that's going to go. Now, normal fibs aren't going to apply here because it doesn't matter. It's going to go way beyond my 200% between the high and low. Even if I use their crazy pricing, it still goes well beyond because it was a parabolic move. But even if it still would be 100% profit if I would have been a seller here or up here, of whatever I sold. But I held on. I wound up selling right in this area in the 1250, and I'll show you another pattern that goes back to 600, because you think that this is just the primary pattern, right? No. Ha ha ha. Ha 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 ha. There's another pattern. Let's go over and see if we can see it. See if one of you can find it. And so forth, of which I targeted. And I'm going to show you the current stock market, which everybody's going on about. You're going to find this funny. And I'm going to tell you the relationship of that, and you're going to see the differentials. The differentials, because that's what we care about. We care about the differentials. Now, I can't really use this. Coinbase has got crappy charts. This is why you have to switch around, unfortunately, between one group to another to get a good placement. The markets are very uneven in the crypto space. They really suck, and so forth. All right, so we're back to this one. Let me show you what I was looking at in the 600 range here. That made good sense to me at the time. And we're going to draw it here. We're going to draw it there. And again, the same principles happen. We need the X move. Boom. And that should actually be 2 here. Close. Okay. Do we see the geometry on this? This was a primary selling. I actually went to be a naked short, which was kind of scary at the 1400 range. And naked short basically means I was selling short without any hedge. And I often don't do that, but at the time, it was a small percentage. It was only 5%, so it was marginal. It's not like I was doing high leverage, trades. So with the one Bitcoin trying to turn it to 30 or whatever. This was just a regular larger trade, but it was a small percentage. It was only like 5%. I was naked short from this level. And what I was looking to do is to sell it for, what point was I looking for on my short? Where was I going to buy it back? Go ahead. I'm going to let somebody tell me the number. So I'm going to let you calculate that. You guys should have some charts open for yourselves. Give me the number I was looking for at the time when I sold above here. Can you guys hear me okay? All right, well, let's go down here. This is 0.4, right? So you got very close. You're absolutely right. So at the time when I saw this structure, there was a combination of structures. There's the 200 that goes all the way back down to here, and that's fine. We're not going to go on. That's longer. I was looking at this one shorter term, and and you had your volatility in there. So it was actually within this range right down here, 0.4. Very good. You guys got that, and that's winds up being around. Let's see, around 360s. I remember 362.27 is one of my entries. And then I had all the way down to 520, I think it was. I was buying at the time. No, not 520, 560. 560 was it? It was like right. It was very close to the lows but anyway, it was under 0.4. 0.4 is the one I want you to focus on. There's your 0.4. There's the retracement. And I don't remember, I told so many people about this, and I think the CEO of one of the ICOs hedged his position off of this chart right here because I was so adamant about it, and they did very well. Many millions of dollars were saved by them not having exposure in Ethereum, because that's what the contracts, they did an ERC20 based token. And I showed them, I gave them this, I repeated it to them like I repeat to you guys over and over. And this is what was likely going to happen, and this is where we were going to go. And now we're down to the 200 mark on Ethereum. And unfortunately, it's a poison well. I'll tell you my philosophy on it. I don't like it because of all the ICO scams and the burn rates and the things that these companies have done. I'm not going to go on about that. That's not important in this webinar. What is important is that you can see the structure. You can see the points that I'm telling you about and the logic that reoccurs and happens again and again, right? So we see that 0.1. So do you see the thing that I like the most in charts on a raw market like this, where I don't have to compete against institutions and so forth, that I can get large ranges and higher profitability, big alpha? That's what they call it in the market. It's alpha, profits, returns. 0.4. Here's 0.4. We'll make that green. How about that? So it stands out. And 0.5 up there. All right, so we see that, right? That's what I was paying attention to at the time. No, it makes sense. It still will have an effect. But these institutions have mathematicians like me. They hire us to go over and find the volume points and the true break and make points. A lot of traders are going to have stops at certain areas. They want to find out where those stops are and hit them. Does that make sense to you? Because that's where volume is. They can clear out their inventory, is what it's called. When a market maker or institution holds a position, they hold inventory, and they want to clear out that inventory and make a profit based off of it. They don't always do that, or their margins are very small, but they have to go over and exact their will in the marketplace. And this is called leading, by the way. Banks do this. They compete with each other and they lead the market. Now, the thing is, they use similar algorithms in totality. So they do similar mathematics that cause certain type of price movements in a given period of time and whatnot. All right, but you understand the structures that I show you right here that I was trading and what I've been trading, what I do trade, and you see the reasons why. All right, and this is just Ethereum. This is just Ethereum. Let's go to Bitcoin. Oh my God, how long did I spend on Ethereum? What time is it?
Erik, we have another few minutes, so I think you still have something you would like to share about the scaling in and out you're doing.
All right, well, no, the levels of which I scale in and out are usually based off of both fibs and so forth, and also on just simple support and resistance levels or median average. So let's take this pattern for example. All right, so we're going to pick 0.2, the low, off of the structure, to 0.5, the high, right? And we see right there, huge, look at that huge range that it goes over to. All right, so where's my intersection on fibs and besides 0.4? 0.4 would be, this is the area around where I would start scaling in. Or conversely, another area I might scale in if I like the price action, I think that there's some support. At the time, I think I did, would be the median of price. The median of price. I want to find lows and highs and where prices intersect. Does that make sense where prices intersect here? Interference in the chart. Oh, you're welcome. Does that make sense to see why I would be a buyer? Down, up, pulls back, pulls down, goes up to here, creates a doji, pulls back, consolidates, goes back up to here, breaks out. Does that area make sense to you why it drops down to here? I want to start buying anywhere it comes in proximity with that green line or under that green line. So I was buying back there. I was actually buying at where was it? 700 at the time. I was a buyer at 780. I think I was overpaying, but I was, things were just super oversold. So I was buying, I was scaling in. Now, the principles of when I scale in, you know, at the time, if I go into this chart and I go on a very small time frame, like 4 hours, oh, this is going to be ugly. Unfortunately, we're only going to be able to do Ethereum today. Do you want me to spend a few more minutes going over Bitcoin and what we can see on it? It's not really that interesting compared to Ethereum. Ethereum has had the greater volatility and whatnot. But the past 3 months, I've been holding nothing but Ethereum. It's been a one-way show. It's just been a total decline and whatnot. But that's okay. It's going to bounce back more than likely. Even if I'm a Bitcoin maximalist now, there's a fundamental reason why. But we're not going to get into that. We're just going to look at the technicals. When I scale in this little blurb right here and whatnot on this is a 4-hour chart. Do you see how oversold that is? And I want you to pay attention to opens and closes. This is very important. The reason I was a buyer here because of the close that it had on the 4-hour chart. All right, when it opens over here, it trades off of this period for a short period of time before exploding back upwards. Now, it also went under 61.8. I have a very good understanding that it's going to bounce back to this at the very least, or maybe go all the way back up to the 38.2 previous, which is 2/3 of the range, which if I invert this, right? If I invert this and I see the fibs, I flip them back around. Now we're going to do it from the high back to the low. Come on. I hate these damn things. All right. The high back to the low, you're going to see it go right back to the 61.8. Doesn't even get to the 61.8. Goes under it. And this is another thing that shows you that markets don't always go exact. That's why I sometimes will be a seller when I see a pattern like this develop inside of a range. Watch this pattern. I noticed this right away at the time. Combination. This is an inside pattern. It's a dual pattern. There's multiple patterns here at the time, and then I was a seller. Oh, up to there. And this one, I think, went to 127.8. It went under it was a smaller inside pattern because of the fact that it had competing geometries that ran into interference, okay? But when I scale into a trade, I might buy one here, buy one there, and then put a buy here and have a buy down here and a buy down here. I'm not going to get hit on all my orders. It just never happens. Sometimes. But in general, I'll probably miss one or two or maybe three. And now my targets are going to be the same. I'm going to be looking for exit points that make sense or patterns that are going to be interfering to get in the way. But do you see the geometries that I'm looking at and how I'm repeating things over and over again? Because that's what's there in the chart, not what I think. And I want to get at rational level, 61.8, oversold at close, a previous median, a 0.4, an 88.6. Do you see why these areas would be entry points on scaling in? And then invert that. I want to sell at 61.8, 38.2, median average above, support, resistance on the other side, and a pattern that might pop up into the marketplace. So all I'm doing is repeating these same logical elements of the market that we can see exact themselves in totality the majority of the time over and over again. And if you want to know the future of Ethereum, more than likely at not this point here, but the larger one, from where it went all the way back down to here, from the 200 range, we're probably going to go over and find support and bounce all the way back up to 600 longer term. Oh, well.
Okay. Thank you, Erik. Guys, all the time we have for now. So thanks, Erik. For the members, thanks for joining. For the non-members, if you want to learn more, you can join us and you can talk with Erik in the chat about all these things. You're more than welcome. I will leave my Telegram name, so if you want to join or have any questions about it, just send me a message. And for the members, this recording will be shown in the onboarding part of our website, so you can find it there. Thank you, everyone. Have a great Sunday, and we'll talk soon.
Yep, and the next one I'll get more in depth on, well, that's up to Evo. He's going to go over and yeah, actually that house is construction, a friend's building. It's a Traeger house. He's popular in Australia, believe it or not. But we're all into his architecture, and we want to build our houses like him.
Cool.
Yeah,
Thanks, Erik. Have a great Sunday, and I will end the meeting now, guys.
okay. Thank you. Have a great day, guys. I hope you enjoyed the presentation and you had a better insight into how I trade.